Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold market. On the first glance, gold has finished the previous week on a positive mood because indeed we've got weaker than expected non-farm payrolls release, and currently we could definitely tell that tapering announcement will be postponed by the Fed. At the bad case it will be in November, but most probably it will be in December. So in September, hardly we will see and hear some really hawkish comments from the Fed. And that should be the supportive factor for the gold. But at the same time, in today's weekly fundamental report, we have considered a few moments that makes overall situation on the gold a bit tricky, that makes us a bit worried on the background on the current action. The problem, guys, stands with the weak activity of the investors on the gold market. In general, if you will take a look at the money flows, you will see that in this year, gold shows net outflows from the all ETFs across the globe, so approximately for the 138 tons. And balance stands in favor of the European Union, so it is interesting investments flow. So if United States we see a clear outflow from the big ETFs, in Europe, mostly they show inflow. But the problem is that the United States ETF is significantly greater than those one that stand in Europe, and that's why in general it totally leads to the outflow. Besides, based on the statistics from the Reuters, gold was showing outflows from the funds within a few months, and even in the last month it was big outflow with $1.4 billion. This month, the gold shows just the first inflow for the few $100 million. So it's not really very great performance. This is first moment that makes us doubt on a significant perspective of the upward action currently. Second, if you will take a look at the commitment of traders report, you also see that open interest is dropping. Although net long position is rising, but it is rising by the closing of the shorts mostly and closing of the other positions, net positions for instance. So this makes overall background of the rally is a bit fragile. And the problem that it's very difficult to estimate the reasons for that. So on the fundamental background, everything seems to be good. So the tapering is postponed. The forecast for economy growth has been decreased for 3 times. So if we'll take a look at the forecast from the Morgan Stanley, Goldman Sachs, and JP Morgan, all of them have decreased reduced the forecast for the third quarter almost 2 times lower for the gross domestic product compared to what they had just a few weeks ago. Delta variant still stands on the first stage, making all markets in tension. So inflation, it seems to be sailing, so we do not see really very big jump in inflation, at least based on recent PPI and CPI reports. So what the problem for the gold to go higher? That's the major question that we have, and unfortunately it's very difficult to find a clear answer. The one thing that we could say is that maybe investors would like to wait for a September meeting at the first glance, that to get more confidence in final statement that no tapering will be. Second, what's also probable that, well, it's not really very big time till the end of the financial year in November. Maybe they think that it's not time to reshape the portfolios right now. So they have some investment in the gold and keep them, but do not add more currently to the positions. Whatever it will be, if situation will not change, hardly the rally will be really constant, and it's really could finish. Besides, gold is moving to the major test of this rally around 1850 area. So investors currently do not set significant targets for the gold. Everybody talks about 1835, 1850 area. It might be could be reached in the nearest future, but nobody tells about return back to the 1950, 2000 even, and so on. So it means that, well, as I said, overall sentiment around gold is moderate, so it's not really very positive. So that's a result why we also, while we will not know the definite reasons for that, we're also prepared to set nearest standing targets on the gold. From the technical point of view, and speaking about the short-term perspective, overall situation here looks also not very bullish, because market on the daily chart, you could say it has reached significant resistance. So the major COP target has been hit simultaneously with our intraday targets around 1830. This is COP with this A, B, C bottom pattern. Upward action here is not really very strong, so especially in the last part, this market was coming to the target. And market currently stands in agreement resistance, as you can see. This is the first moment. Second, if you'll take a look at interest rates, you will see that on Friday it was rally up because wage inflation has increased. Despite the poor numbers on the payrolls itself, the wage inflation has shown the increase, and that is a result you can see on interest rates. It's also have jumped for approximately 3% on Friday. So combination of this behavior here and existence of the strong resistance tells us that currently it would be better to stay aside from the taking any new long position on the gold. It's very significant chances on the pullback here. And as on the euro currency, as on the gold, theoretically we could consider the same patterns. I'm talking about the reverse head and shoulders that might be formed here, with a retracement back to the 1760 area, approximately 1770. It might be the bottom of the right arm, where it will be much better to consider taking the long position. So besides on the 4-hour time frame chart, on the hourly chart, we have some patterns that could trigger this retracement. On the 4-hour time frame chart, recall that free drive that we have. This was accurately completed on Friday. It's right here. And besides, the last part of this pattern is a butterfly sell. As you can see on the hourly chart, this also has been completed. The one concern that we have in the shorter term, it's this acceleration, but we should understand that this acceleration was a reaction on the payrolls numbers, and since we have strong daily resistance, it should become stronger than any intraday bullish factors that we have. Theoretically, well, with this acceleration, we could suggest that market could show final action here to the 1836 to complete the 1618 butterfly target, it to fade the momentum of the Friday action. But in general, that's an area where a theoretical market could stand the bounce. So if you're a scalp trader, you trade on the intraday charts, you could think about taking the short position, but it would be better to wait for clear reversal patterns on the hourly chart and on the lower time frames. Because currently, if you would like to act based on the butterfly or free drive, you'll have to hide your stop above the 1840 and above the daily agreement resistance. But if you wait a bit, you will see maybe here a minor pattern could be formed. For instance, if market will complete this target, it might be minor hand and shoulders will be formed here or something of that sort. That will let you to step in with the better conditions of placing the near standing stop and maybe at even a better price to sell. So, but in general, this is possible to consider, taking the scalp short position here as well. That's not forbidden. So that's our view on the gold market, and this major riddle, as I said, is the reason why investors are not hurry up and haven't increased the position in the gold, although overall background stands, well, mostly friendly. So I think that we will find out it within the few weeks, maybe, or months or two, just because it should be, find a role into the statistics. So it will be either in the statistics or in sentiment positions that we using taken from the Camino Traders report and some other sources. They should indicate the overall view of the investors and their positions in the gold market.